Hi, I'm Patu from freefincal. The IRDA has released its latest annual report for 2018-19. The claim settlement ratios for life insurers are now available. Uh, Last year, I had presented data saying pretty much what I'm just saying right now. It's not useful at all. It never was a factor for choosing life insurance, and now the data is such that it's practically useless. One cannot pick an insurer based on claim settlement. For some reason or the other, thanks to a bunch of irresponsible bloggers and reporters, this became popular. And people started making a hue and cry about importance of claim settlement ratio and so on. It is not a probability. I don't understand. It's so frustrating. We have a tendency to assume that any ratio A by B is equal to a probability. It is not a probability of a claim getting settled. There's so much that a claims settlement ratio does not talk about, does not cover. It does not distinguish between an established player and a new one, like we shall see in this data. And there are so many things. I mean, if you have a company A with a claim settlement of 92.4% and a company B with a 96.1% or something like that, we don't know what are the kind of policies they were involved. We do not know the sum assured. The report indicates the average kind of sum assureds, whether they were high or low and so on, but that's not of much use. Typically LIC will have a sum assured that's doled out low because most of its policies are small policies. They won't be dealing with high end policies because they are from they're not from the cities, and they usually will be split up into multiple policies. And we don't know why the claims were rejected. The problem is we assume that if the insurer rejects a claim, it is the fault of the insurer. That is stupid. I mean, people routinely hide things when they apply for insurance. They hide the fact that they drink alcohol, they hide the fact that they are smokers, they hide relevant diseases that they should be disclosing. And if all these things come out to light during the claim settlement process, then they will say the insurer is to blame. You post anything about a claim being denied or delayed in Asan Ideas of Wealth, immediately people will say, get a lawyer or do this, protest, you go here, go there. People don't understand that the mistake could be that of the claimant, and that's never. I mean, not the nominee, but in the case of life insurance, but the person who actually applied for the life insurance. So we don't know all these things, and we just use a number. It's like buying a stock just looking at its P. This is dumb beyond belief, but that's what people. But I'm very glad now, even for the fools who believe that claim settlement ratio is important, the data is completely useless because many companies have a very high claim settlement, and it's of no use anymore. So let's take a look at the data. I've written some other things I usually write, but let's take a look at the data. Some people are claiming that Tata, AIA, HDFC, Max Life, and ICICI have a higher claim settlement than LIC. This is completely complete nonsense, because look at the total number of claims for LIC and the claims that they have paid out, and look at the numbers here. These are trivially small and compared. So these numbers 98, 97, and so on. So the number of claims paid divided by the total number of claims, when the total number of claims is small compared to that of LIC, the claim settlement will fluctuate quite a bit. One year it will be 98, one year it will be 99, 97, and so on. So it's not of any particular use, and the only reason why people search for claim settlement is because they don't want to pay high premium to LIC. That's all. If LIC had a lowest premium, automatically they will choose LIC. That is the simple fact. They are searching for reasons. They are searching to mentally satisfy themselves to justify their purchase. That is the only reason why they are searching for claim settlement. That's basically it. And some people talk about efficiency of operation and so on. Private players are very efficient when it comes to getting new business. Guaranteed, they will make it very easy for you. They will roll out the red carpet and get new business. Will they do the same in the at the time of claims? I don't know. Nobody knows. This is certainly true in the case of health insurance. But LIC is a dinosaur. It doesn't. It makes both processes. Getting a policy is difficult unless you do it with an agent who is willing to give you term insurance. Getting a claim will also be difficult. Just like EPF interest, it will come. You just don't know when. That's the kind of thing with LIC. But at least it will come, even at the cost of loss to the organization. It will come. That's the kind of thing. But if you look at the ombudsman case files, LIC has also rejected claims when they are clear that there is a fraud. So whatever the company, when there is a fraud, there, I mean, you can't crib. And so that, and even fraudulent cases will make claim settlement ratio lower. So there's no real benefit. So if you look at this, look at that. Practically most of them have more than 95%, and that's just useless, right? 10 out of 23 companies have got CSRs of claim settlement ratios of greater than 97%. 21 out of 23 have got claim settlement ratio of 95. How on earth can you distinguish between 97% and 95%? This is stupid. I mean, it's just plain irresponsible if people write posts about health insurance policy, best life insurance policies and health insurance based on other things. We'll talk about that later. It's just stupid. Nobody can meaningfully buy. If you don't want to pay money to get a LIC policy, work with established guys like HDFC, Max Life, ICICI. They are the highest in terms of market share. You can see they have the next highest claims. That's all. Forget the claim settlement. Look at the number of claims made. That shows their market share, second to LIC, of course. But just work with them, and that's all that you need to worry about. Don't waste your time looking at all these things. I mean, at the end of the day, whatever you can do, you can sit and do analysis after analysis after analysis. At the end of the day, buying life insurance is a leap of faith. You have to take the chance. So I have now plotted the number of claims paid versus the total number of claims, and this is in log scale because of LIC again. And last year, I have linked the post inside. Last year, this was not such a perfect straight line. If I remember, Shriram Life Insurance was outside this line. There are one or two more companies which are just below. But now it's a nice perfect straight line, which means that as the number of claims increases, these dots will move up, and pretty much the claim settlement ratio will be more or less similar for all the companies. And you can see that much better when you plot the claim settlement versus the number of claims made. Last year, these red dots were in the 65, 60, 70 and so on. Now, most of the dots are above 95%. Only 3 or 4 dots are, 2-3 dots are between 90 and 95%, and just one dot is 85%. So it's basically, it's a useless metric to choose life insurance policy. Don't waste your time. You have to take a leap of faith. If you are worried, pay money and get it from LIC. There's no choice. So that's what I want to say. Bye-bye.